welcome. I appreciate Aggie being here and Sandy being here. And today we're going to talk a little about AI, obviously. But, a lot of the conversations we've had at SmartBots recently have been around more the technical aspects and overall themes related to reconciliation and fraud. I wanted to get a marketer's viewpoint. And Aggie, I guess I'm still calling you a marketer. You've had a rapid ascent over the last few months. You've gone from a chief marketing officer to EVP of brand, right?
That is correct. Yes.
You were like and the name of the credit union is Skyward. And I think you truly are Skyward. You're like rocket bound right now.
We are. We're just moving forward. I think exciting things happening at Skyward as we expanded our field of membership recently. And then personally and professionally as well, of being able to really help kind of take the role from traditional marketing and really think about it from member experience, really, which I think ties in well to some of the conversation that we'll have today.
How did now that you're back into banking or credit unioning, I guess, right? Mm-hmm. Is that what it's called? How's the change from Citizens Bank of Edmonds and the community banking moving into community banking at a credit union? Has that been a shock, or you're just comfortable with it?
Having had prior credit union history, it's been welcoming to be back in the environment. And a lot of community banks are like this as well, but what I really enjoy about the credit union world is how we're able to brainstorm and discuss and share ideas, what's working well, what's not working well. There's less seeing each other as a competitor per se, and more of just all being in it for the greater good to help serve our members. And so I really enjoy being part of this world again, where we can collaborate and share ideas.
So let's jump into some of the AI topics, and I'll ask both of you this one. Credit unions have been hearing about AI nonstop. There's just so much hype about it. In the last 12 months, and we'll start with you, Aggie, what do you think has really changed that makes AI more operationally real?
I think what's really changed here lately is going from it feeling more experimental to being operational. 12 months ago, a lot of AI tools felt too technical or maybe too risky or too disconnected from how community banks or credit unions were actually working. But I feel like now large language models are becoming more accurate, stable, explainable. And financial institutions are now able to use AI for real workflows to solve for whether it's loan underwriting or AI-assisted communication, member feedback, and trend analysis. And they're able to do that without needing large data science teams. And I think governance and security has also caught up. Internal policies, we're starting to see those being rewritten at financial institutions to really allow for AI and governing the usage, making sure it's done responsibly to keep data safe. And then I think just becoming more practical with use cases instead of maybe initially financial institutions having that shiny object that they were trying to go for that takes a lot of uptime, a lot of ramp up, a lot of data history. They're starting to realize that they could pick more narrow, high impact areas. Again, whether it's automated loan underwriting for quicker decisioning or identifying where there's friction points and improving service without adding headcount.
That's going to be a big one. Sandy, what are you seeing over the last several months?
I agree absolutely with everything that Aggie just said, because 12 months ago, everybody was caught up with the models. And that was the new thing on the block. Now the ability to explain and ability to use it responsibly, two words that she just used, are both catching up. And the ability to ensure that there are no hallucinations, the ability to control the workflow and make the LLM do exactly what you want has now become a more practical way of doing these things. And I think that is the biggest change from idea to being able to execute today. And absolutely right, there are specific use cases that make sense. Earlier, even the scoping a year ago, people didn't know how to scope an AI project. You'd go there and somebody think a chat GPT style answer everything is an AI project. Somebody would want to do something else. Today, people are far more clearer in terms of how it plays out in each of their workflows and where they can use it and where they cannot. And the amount of education the industry or the public in general actually has had about AI is massive. And it's unbelievable that in a year and a half, so many people are actually able to talk with so much nuance about AI. That's a big change.
I mean, I'm even at the point that I'm writing custom prompts. I mean, and I'm not a technology guy, and what I'm learning from AI and the various LLMs I use is really interesting. I personally, I think it's important to experiment with different LLMs too. Aggie, let's go back to you for a minute. As a CMO or former CMO, and you're still kind of in that role when you think about it, being the true brand evangelist. Are you seeing that increasingly credit union heads of marketing and experience are becoming almost like the chief data officers?
Yes, absolutely. I would agree. I would say the expectation now, which is maybe what helped align the title change, is because I came into Skyward Credit Union and it wasn't just being focused on campaigns. It was really about being data and intelligence driven and really helping the organization to see and identify where we were missing data or not utilizing data, where was there friction in the member experience journey. Because I think really the expectation of the role has shifted over time, and we're expected to understand consumer behavior, their intent, and again, those friction points across their entire journey, across all touch points. And so I came in and analyzed whether it was the onboarding on the online banking experience or when they were texting us, what did that look like and feel like when we were doing marketing and messaging. And so really identifying all of the different touch points that our members are going through, and then help identifying trends and data and friction, and then utilizing that information to really improve that member experience. And being able to come in and do that and think differently as a marketer is what helped me to really quickly ramp up and shift my roles and my responsibility from chief marketing officer to chief brand officer. Because yes, I think over time, what people are looking for in a marketer is different than just the typical ads and messaging and communication. It's really blurring, I think, the line now in engagement and support. And I think AI helps us do that, to be able to take that data. But now the best experiences for members are coming from when marketing, digital, contact center, all the different channels are working together off of the same data and the same intelligence.
Years ago, when I was with Geezio, it was probably about 2010, I worked with my coworkers there, both Pete Glyman and Sean Ward, and then Brett King at the time was an advisor at us. I know you know Brett, and a guy named Alex Sion, who was at Sapien Nitro. We coined the phrase engagement banking. This is 2010. And I think that engagement banking still kind of holds true today. It's about reducing friction regardless of channel, giving the member, the customer, the chance to move from one channel to another seamlessly. That term omni-channel banking always comes back up. But it's all about the experience, right? It's a highly commoditized industry. You can compete on rates, yields, fees, but it doesn't seem like that resonates that much with the average consumer or member. They're looking for highly contextual, relevant conversation, aka engagement, regardless of channel, regardless of delivery methodology, whether it's personalized marketing that's meaningful to me, or it's just leveraging any touch point in a meaningful way. That's what makes the difference, I think. So it sounds like you totally drink that Kool-Aid, and that's good to hear. But it's easier said than done. I mean, there are a lot of systems. I'm not going to get into the good, the bad, and the ugly of the cores. And frankly, I think most of it's rather ugly. It's clunky, just like the industry is. Sandy, so from SmartBots seat, how do you see AI readiness today at the typical financial institution?
So AI readiness, I'll break it into two or three sort of buckets. First one is data. And the truth is actually the financial services industry, whether it's banking or credit unions, actually have one of the best data sets if you look across industries in terms of actually having the data having been regulated. Obviously, they are in silos and they are not necessarily ready for AI. And the readiness for AI largely comes from the metadata that you need to be able to pull the context together for AI to understand. So data is one bucket. In terms of AI readiness, I think the good thing is banks and credit unions already have all the data. They need to make it AI ready. So there's a little bit of work to be done there. The second part is personalization. AI in a customer facing or a front facing kind of a use case means nothing if it's not personalized. Doing generic stuff with AI, then you're using, a tool which is not being fully exploited. So for personalization, again, breaking some of the data silos and actually identifying much more specific use cases than general use cases is where we'll be able to move the needle. So in terms of readiness, I'd say data is one, identifying the actual personalized use cases, because generic omni-channel presence and all of that, a lot of banks and credit unions have already done a lot of work on a lot of them. A lot of channels already exist. They're all pretty good. How do all the touch points tie in together? How can you personalize it is where the differentiation will come now. So that's the second bucket. And then the last bucket is about using AI for insights. It doesn't have to be complicated business insights. It can be very simple ones. It can be that, this is how you had a variance from last month to this month. What are the reasons for that? Highlighting that for a user sounds very simple, sounds very doable. The technology is there, but it's not done today. Comparing last month's statement to this month's statement is an activity which I still do on a spreadsheet, even today, right? But AI can actually help you do that kind of stuff better. So these three, I think the technology is there, the data is there, getting it all together will what move the needle for the use cases here.
Yeah, I mean, you're touching upon some of the reconciliation discussions we've had. I'll give you an example that just happened to me, having returned from vacation. I went into Chase, into my digital banking. That's where I do a lot of my everyday banking at Chase. I think they're top notch when it comes to tech. Scanning through the transaction feed, which I import into Quicken because nobody seems to have a really good online financial management solution for me, because I aggregate accounts across brokerage, investments, NFTs, a lot of different asset classes. But on the retail banking side, I see in the feed two identical transactions for $2,500.50 with my county regarding my personal tax, my property tax. For some reason, my ACH was hit twice when it should have only been hit once. I'm out 2250 right now. AI didn't show that to me. There was no reconciliation messaging. There was never any advanced predictive notification sent to me. I actually had to go into my physical transaction feed online and then do my own reconciliation using the Intuit tool. But I didn't even need to see it. I just saw it right there. It would seem to me, considering I've been banking at Chase for a few years now, they have transactional history between me and the county. There's no reason they shouldn't have been able to send me a quick notification that says, hey, we noticed unusual redundancy. Just a heads up. Because the average person doesn't do what I do. They don't go into their online banking experience 3 times a week. They're not as anal retentive as I am when it comes to managing finances. I manage to the dime. I mean, I drive my wife crazy. But that's an example of AI being able to say, hey, time out. Something looks unusual. That's either an issue with their core processor, which I believe they built their own through SAP and Oracle, or it's their digital banking provider, which again, I think they've built their own. But from a member experience point of view, it's a missed opportunity. I had to do the work. Getting back to what Aggie says, we have to reduce friction. There's a lot of friction for me. And then on top of that, now my wife's on the phone with the county saying, hey, we got hit twice. And you know what they're going to do? They're going to write a check and they're going to send it in the mail, which that's a whole nother discussion on awkwardness. Aggie, let's go back to marketing budgets. I love talking about marketing budgets because I don't have to build one anymore, but it's always a nightmare, especially at this time of year when you're refining it. I know that marketing budgets are tight. Which AI cases do you feel could deliver ROI the fastest?
Yeah, I was going to say budgets are always tight. It never feels like marketers. I think you always want more than what you're allowed to spend. But I think when you're really looking at what those use cases for AI are that have the fastest ROI, I think it's those that can either reduce cost or friction immediately, not necessarily from complex prediction models that take a lot of time to build and fine tune. I think the quickest wins to showcase what it can do for your organization are those operational ones. Reconciliation, like you mentioned, or fraud detection, or faster loan decisionings, the ones that can really improve that member or customer experience, but then also hopefully make a really quick impact to the bottom line for that financial institution. And I think from a marketing perspective, AI performs best when it improves engagement, like we mentioned, those trigger-based responses. Again, if there would have been a trigger to show that there was that duplicate charge, I think those have the opportunity to have a really quick win under the belt of that financial institution, build some trust, build some confidence, and then later they can layer on the more complex ones. But to really start initially with those that could provide a lot of early on value that don't need to take a ton of historical data and experience in order to really build.
If you, Sandy, had 90 days to help a community bank or a credit union become AI functional, what do you think you would start with?
I'd start from a non-banking technology point of view, first deciding the use cases and then looking at the data because you need the data, and it's not the current data that people are already collecting. It is mostly the metadata that is required to use AI properly. It is the ability to link the data to the use case and to different data sets, and then unleash the AI on top of that. So I'd look at the use cases, I'd look at the data, and then I'd look at explainability and reasoning. It's not just in member experience and customer facing, even in backend, but more so in a member experience or customer facing AI solution, that explainability and interaction is key. You don't want the AI to have to make an assumption and give you an answer. It can actually ask you, saying, are you interested in this? And then do the rest of the stuff. And it sounds very simple, but the number of times people jump to actually having AI execute versus doing, and today the models are great at reasoning and understanding and interacting. So using that properly. So what is the use case? Do I have the right data and metadata? And am I able to provide the right reasoning, explainability, and experience? These are the three things that I'd look at. And I'm sure there are many use cases for each particular bank that we can make them AI ready in 90 days.
Aggie, is there a use case that you can think of that's top of mind for AI that you're not hearing vendors talking about that maybe they should?
I think what's top of mind for me now is that member experience and taking that survey feedback. So we just recently launched a Voice of the Member survey program. But I want to be able to take that data and now actually be able to very quickly identify those trends and be able to take action on it. I don't want to ask members for feedback and then not actively be doing things to drive the change. So that's what's really top of mind for me at the moment, is just making sure that we're taking, and in the future, hopefully also calls, be able to take the recorded phone calls and what are members calling us about, what are they texting or messaging in from our website about, and then layering in the survey feedback and taking all of these different channels of communication and being able to identify where could we be providing them some answers quicker, self-serve, so that they don't have that issue in the first place or question in the first place. But what are the products and services or things that we could be doing to really enable them to do their banking self-sufficiently and to provide the best experience?
Well, and yeah, with engagement and transactional volume increasing, there are all these little data points coming from all these different places. There is obviously an opportunity for AI to kind of do a timeout, aggregate that, take a look at it, and based upon your queries, provide information you can act on, which again, the key word is going to be relevance and context. So Sandy, I'm going to let you have the last word on this one. Sandy, what do you think is the most overhyped aspect of AI?
I think the autonomous nature of AI is coming in the news all the time nowadays, that AI agents will act independently. I think that's way overhyped. I don't think they're going to act independently. I don't think they should act independently in most use cases. Where you use it wisely to do the limited scope that it's provided is where it actually works. So I think the AI will do all your planning. AI will act independently. It will study your data and do stuff by itself. I think a lot of that is overhyped today. I think building it cleverly as a piece of a existing workflow, along with human in the loop for decision making wherever required, is probably the way it's going to play out and the way it will succeed. This whole autonomous nature of AI is, according to me, the most overhyped concept right now.
I agree with that 100%. And I think Aggie does too, because in her seat, she and others like her, and me included, for decades have talked about this high-tech, high-touch business climate we're trying to create. And I think that's what AI can do. I think AI can add quality to engagements. I think the autonomous nature scares a lot of people too, not only emotional because there's fear that AI will replace my job, and it will have an impact on career paths and jobs and positions that are open. But I think there's a chance that as many new opportunities will open up as a result of it, and we can focus our talents at a bank or credit union on the quality of engagement rather than just the triaging that we're always doing. We're always putting out fires in this banking industry of ours. And there's got to be a way that we can use AI to help us fight those fires in a way that it's much more meaningful, engaging, and obviously relevant, so that a customer experience really that's very positive really resonates with every single touch point. And I think that's what'll separate the winners from the losers. Aggie, anything you want to add?
No, I would agree. I think everything that you said is spot on. It'd be exciting to see the journey and the evolution of how financial institutions are using AI, but I think everyone is starting to lean in more now. I think now that they're seeing it as less risky and really identifying those low-hanging fruit, those AI use cases that could really make a difference, even if it's just on the back office initially to really get comfortable with it. But I think it'll be exciting to see what continues to evolve in the financial space regarding AI.
Like I always say, I don't think there's ever been a more exciting time to be in the banking industry. And, I'm semi-retired and I still am excited about that. The only reason I'm doing this is I really enjoy AI. I do believe that the industry may be at a pivot point where we start delivering on the things that we have promised. Listen, I really appreciate the time you've all dedicated to this. We're going to publish all your contact info at the end of this, and hopefully some people will reach out to you and ask you some questions, and who knows where this will go from here. But I really do appreciate your time.
Thank you, Aggie. Thank you, Brian.
Thank you.